Hi, I'm Mike Capizzola from the Investing Channel, and welcome to IP Go, the show where we take a look at the IPO world, past, present, and future. Wider markets may be searching for direction and purpose at the moment, but the IPO market seems to have a real spring in its step once more, and a large part of that is probably down to the performance of Oatly, the maker of dairy alternative drinks. Oatly priced its IPO at $17 a share, raising $1.43 billion. However, the stock opened at $22 on debut, valuing the business at $13 billion. That performance is all the more remarkable because Oatly effectively created the oat-based dairy alternative market on its own. The business was founded in Sweden in the 1990s and patented a process for turning fiber-rich oats into liquid food. Its products are sold in more than 90,000 outlets in 20 countries, and Oatly is expanding into ice cream and yogurt. The stock, which is listed on NASDAQ, has traded as high as $22.63 and remains well above the IPO price at just over $21 a share. Another company with its sights set on a multi-billion-dollar IPO is Neptune Energy, which is said to be mulling a $9 billion listing with JP Morgan and Rothschild seen as likely advisors to any deal. Founded in 2015 by Executive Chairman Sam Laidlaw, the business is primarily a natural gas producer with assets in Norway, the Netherlands, the UK, North Africa, and Asia Pacific. In different times, Neptune Energy might well have considered a New York listing. However, it's 49% owned by China Investment Fund, effectively a Chinese sovereign wealth fund. And with trade and political relations between China and the US still strained, the company may look elsewhere, with London and Amsterdam seen as possible listing venues. Neptune has generated free cash flow of more than $3.5 billion and paid $800 million in dividends to shareholders since 2018, and has experienced production growth of between 30 and 40%. The IPO will be seen as a test of investor appetite for energy stocks in an era of reduced carbon emission and moves towards net zero 2050. Elsewhere, Chinese tycoon Lu Yonghao, who made his fortune in agriculture, is hoping to list his property services company New Hope Group. The former teacher from Sichuan has prospered under communism and has built a fortune that puts him in the list of the top 100 richest people in the world. He's very well connected politically, having been a member of the Chinese People's Political Consultative Conference since 1993, and he also served in the National People's Congress for 5 years, from 2013 to 2018. Chinese authorities have been cracking down on the country's entrepreneurs and tech giants over the last year, and it will be interesting to see how the company's $105 million IPO in Hong Kong will be received by investors there. Back on U.S. shores, online job site ZipRecruiter Incorporated will come to the market via a $1.558 billion direct listing. The business will list 86.6 million shares on the NYSE under the ticker ZIP, with a reference price of $18 a share. The deal is being coordinated by Goldman Sachs and JP Morgan. The recruitment company, which was founded in 2010, employs 772 staff and has generated revenues of $418.10 million and net income of $86.6 million over the last 12 months. Direct listings have had a patchy track record so far in 2021. Online gaming community Roblox has gone from strength to strength since it debuted, and its shares are up more than 30% since March, while cryptocurrency exchange Coinbase has seen its stock price fall by as much as 25% in recent weeks. Of course, we couldn't close the show without looking at what's been happening in the world of SPACs. Tritium, a manufacturer of charging points for electric vehicles, announced that it is to list through a merger with Decarbonization Plus Acquisition Corporation 2, which is traded on the NASDAQ. The deal will value Tritium at $1.2 billion and will generate proceeds of around $400 million. Tritium, which is based in Brisbane, Australia, produces both charging software and hardware and counts Ford and Volkswagen among its customers. Founded in 2001, ex-Boeing executive Jane Hunter became the company's CEO in 2020, and the company has expanded beyond Australia, opening design and production facilities in Europe and California. News of the Tritium deal comes as Swiss/Swedish conglomerate ABB prepares to spin out its charging business into a separately listed company. That's all we have time for today, but as usual, make sure you do your own due diligence before making any investment decisions.